Hey guys, welcome back to the channel. In this video, I'll be going over how much distribution income I got from these high yield ETFs, as well as go over my buys for the week. As always, don't forget to smash that like button if you like this type of content so the algorithm gods know that I'm here, and hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, you guys know I have to hit you with a quick disclaimer to appease the YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. With that out of the way, guys, let's hop over to the portfolio. This week has been absolutely crazy, all right? Absolutely crazy. This week, I've pretty much fully recovered and hit new all-time highs for this portfolio. This was sitting at around $350,000. I don't know why it's not showing here on Robinhood, but I did post a screenshot in my community. So link will be pinned as a comment if you guys are interested in joining, community of like-minded investors. All right, with that little plug out of the way, this portfolio did hit new all-time highs. Very exciting, right? A lot of my holdings have actually been ripping. Well, maybe not all of them. Definitely the hotter stocks, like Palantir and NVIDIA and Robinhood, they've just been absolutely ripping. But you guys can see I was down quite a bit over here. All right. I was down a lot and then just bought it all up. And here we are today. All right. The stock market just seems to be extremely resilient. Retail investors are just buying up every single dip. And it's amazing. I think we're definitely going to be ending this year out on a very, very good note. All right. But more on that in just a moment. We are here to see how much dividend income I got from all of my high yield positions. A lot of them did pay out this week. So this week is going to be a really cool payout. But as you guys know, I use a very fancy notepad to add it all up. So I'll do that towards the end. All right, so here we go. We have PLTW. All right, this is all a weekly pay ETF from Roundhill. NVDW. All right, you guys can see the share counts here. HOOW. XPAY paid out, XDTE paid out, and MSTW paid out. So all of these ETFs paid out this week, and here were the amounts, okay? For, let's see, that's yield max. All right, for NVDW, paid out $374. We also have MSTR or MSTW paid out 150, 374 from HOOW, 723 from PLTW, and we also have XPAY paying out $1,197. That came at the right time. And then we have a pending dividend payout of $385 from XDTE. All right, just for any new subscribers who are wondering, what are these ETFs? All right, this is XPAY. This is a S&P 500 Target 20 Managed Distribution ETF. Basically, they're targeting 20% returns when annualized. And then we also have XDTE. This is a 0 DTE cover call strategy ETF. All right, distribution rate's about 30%. I've held this for quite a while. Very, very, I'm happy with it. But if Roundhill comes out with some new funds that I have on my radar, especially the fund of funds, similar to like YieldMax's YMax, if they come out with that, I may have to make a decision about this XDTE. Or if they come out with a S&P 500 weekly pay, which would be insane, I would probably opt for that one as well. We'll see. All right, we'll see. Roundhill is coming out with some really cool weekly pay products, so I'm just waiting and seeing what they come out with. All right. The weekly pay ETFs for any new subscribers, all right, or any new viewers, I just want to briefly go over these. These are the weekly pay ETFs. As you guys can see, there is a list of these. They have pretty much all of the Mag 7, all of the popular stocks, all right? They have Broadcom, AMD, Palantir, they have Berkshire Hathaway, Netflix, plus the Mag 7. Like, you're going to get a really good basket here if you're interested in uncapped upside with income, all right, on your favorite stocks. But they also have a downside that you have to be aware of. All right. These are 120% exposed to the weekly performance of the underlier. So if the underlier goes up 10%, you're going to get 12%. But if they go down, 10%, you're going to go down 12%. All right. So you have to keep that in mind. The other sort of drawback to these is that the distributions are very, they're not stable. They change every other week. All right. So just please keep that in mind. These are not, fixed income instruments or fixed income products. There has to be momentum behind the stock. As you can see with PLTW or Palantir, there was a lot of momentum this week for this stock. After earnings, after they crushed earnings, this stock has just been ripping to new highs. I predict that next payment is going to be just as much as this $1.14 for this week. All right. So just something to keep in the back of your minds if you're interested in something like this. All right. So going back to the portfolio, I'm going to just show you guys how much income I got for each of the ETFs. So here we go. All right. So PLTW, I hope you guys can see this without blinding you. PLTW paid me out $1.14. NVDW paid me out 95 cents. MSTW paid me out 78 cents. And HOOW paid me out $1.59. That is crazy. That is just crazy. All right. All right. So that was the community. Just wanted to show that to everybody. Okay. So how much total distribution income did I get this week? All right. So let's take a look at, if I can pull it up here. All right. So here's the notepad. For this week, I made $3,204.88. All right. So this was a really, really cool week. Again, probably one of my better weeks. And this is only because XPAY paid out the first week, which I honestly didn't expect. So that is awesome. All right. That is really, really awesome. So I did have some buys for the week. I have MSTR. So we're going to cover that real fast. So MSTR, I ended up buying a bunch this week, or MSTW, I should say. So I ended up buying a bunch this week. I'm very bullish on MSTW or MSTR. I do expect that as Bitcoin continues to rip to the new highs, that MSTR is also going to rip to new highs. Not only that, I recommend people check out the earnings call for MicroStrategy. It just made me even more bullish on the stock. All right. If you guys want me to kind of go over that video, it's really kind of in depth, but if you guys want me to go over that stuff, I absolutely can. Just let me know down below in the comment section. I would not shut up about it in the Discord community. All right. So, let's see how many buys I got this week. So, 57 shares pretty much today. It was pretty much a total of 57 shares today. I was just kind of watching it and then timing my buys, earlier in the week. Let's see. I got another 25 shares here for $1,000, and then another 22 shares August 5th, and then again another 3 shares and 25 shares on August 4th, right? And then it looks like, yeah, that was about it. So I just been buying really heavy into MSTW, and I really shouldn't, because I'm putting a lot of fresh money into this Bitcoin strategy. You know, where it's a trifecta. It's MISTY, MSTR, common stock, which I swapped out for MSTW and IBIT. I really should not be putting money into MSTW, but I just can't help myself, because I really do think that MSTR is about to have a huge breakout, and I want to be able to capture all of that upside. And now that I have MSTW, it pays out a dividend or a distribution, whereas the MSTR common stock did not. So now, as part of this Bitcoin strategy that I'm following, or the trifecta, I have basically two income producing assets in there, or 2 income producing instruments versus the one, versus just MISTY. All right. So anyways, that'll do it for the portfolio update, guys. Again, really good week, $3,204 for this week. Again, I'm just really actually excited because I really think we're going to go for new highs, new stock market highs. And I think we're going to end this year off really, really good. Okay. So let's hop into just some real quick background stuff. So Palantir reached new highs. All right. Look at that. $186. It just kept blowing past everything. All right. All the resistance, as soon as Liberation Day came, look at this. Look at this. I mean, you guys can see it for yourself. Up 21%. All right, 21% basically over the last 5 days. Just crazy. And I think, congratulations to anyone who got into Palantir, or anyone who's holding PLTW. Again, this is probably one of the most unloved stocks by Wall Street. There's always the bear case that the valuation for this is way too high, that it's going to come crashing down, that, they need to make more revenue in order to support these PEs, all this other stuff. Me personally, I don't believe that, because if you look at the Mag 7, Google, Amazon, Microsoft, Tesla, Apple, all those other Mag 7 stocks, NVIDIA even, they all had the similar bear case put against them over time. They're overvalued. They don't meet their PEs, or these valuation metrics don't match up, et cetera, right? But it's the story behind Palantir. And if you guys look at Alex Karp and do a little research on him and see how he, like the way he was talking on the earnings call, I mean, I'm betting more on the jockey than I am on the horse at this point. I mean, Palantir is a fantastic company with really good software, but it's really the CEO, Alex Karp, that is driving this, you know, he calls it this warrior culture within Palantir. So I'm very bullish on Palantir, and I am excited to see what they're going to be doing in the future. They don't need just government contracts. They have been securing commercial contracts. And as more and more companies adopt them commercially, Palantir is going to grow. And again, I can see Palantir starting to be used overseas in the finance sectors and the finance districts of these, you know, countries. It's just going to be crazy once Palantir becomes mass adopted. All right. So anyways, talking a little bit more about the gravy train and everything going up in value, Robinhood made a really dramatic comeback and it broke its all-time highs. All right. So its last all-time high was about $109. Really, it was about I think about 113 if I'm not mistaken. I don't know why this chart only shows 109, but this past week, it just broke that and more, right? It's just continuing to climb to new highs. And as you guys can see, I own HOOW, and their payouts have been really, really good, at least $1 and change. I think there's only 1 week so far since inception for HOOW that the payout has been less than $1. So again, momentum behind the stock equals really good payouts for the ETF. All right, so again, Robinhood doing a lot of amazing things. They have, I think, some banking features coming to Robinhood, and they're trying to, you know, basically branch out more into the crypto space. So again, really exciting things for Robinhood and the future. So Ethereum also made a huge, finally broke 4,000. All right, finally broke. They've been hovering at this weird spot for a while, and now they finally broke 4,000. I think Ethereum is going to rip easily to the new highs. I got nothing backing that up other than what I'm hearing on YouTube. All right, right now the bull case from Tom Lee, which I'll get to in a moment, is Ethereum could reach possibly 15,000 by the end of the year. Of course, that is a lofty price target from 4,000, but it is possible. We'll see. I don't know. Ethereum, you know, cryptocurrencies in general are very, very volatile, so who knows? But if we look at the 1 year, they finally, after 8 months, finally got to their break-even point, right? So they had, you know, Liberation Day, tariffs, all that stuff, all that bad news, and then finally it's just been steadily climbing. So I think this is going to be that moment, and the way I'm taking advantage of this is by investing into an Ethereum 2x position, all right? This is ETHU, ETHU, all right? That's the ticker. I'm investing into this, not financial advice. Don't copy my trades, all right? But this is a 2x Ether ETF that I'm investing into. So I'm going to be holding this. And if this reaches, you know, if Ethereum reaches 15K, I'll probably cash out by the end of the year. I don't know if I'll hold this long term. Again, this is a what you call a leveraged ETF. So they're going to have, you know, volatility decay, time decay, negative compounding. So you have to be careful with how you invest in these ETFs. All right. So, all right. Let's listen to the man himself, Tom Lee, talk about what he sees for the end of the year.
What's up with this market? We tired? Have we run out of gas? What's the story?
I think the market's consolidating and maybe trying to get direction from what the market does, because we did gain 28% from the April lows. We got to digest that. Now we're in August, like the dog days of August, where liquidity is lower. And I think that we're still holding our breath because we're in a period where the Fed isn't going to make an interest rate decision until September. So some of the key macro is kind of on hold. So I think markets are wait and see, but I'd say...
Again, August was supposed to be a down month. And we had Liberation Day, and we're already the first week in, and the stock market is reaching new highs. And we have a very high probability of getting a rate cut in September, which again, for me personally, is a huge tailwind for 3 reasons. 1, for Bitcoin, all right, for Bitcoin. 2, for Ethereum, and 3, for real estate. So this is great tailwinds all around, even for just regular companies in the stock market. This is all a great tailwind. This, again, the probability is very, very high according to the CME Watch Fed group.
That pullbacks have been shallow.
Is it fair to say there's a more sober view from investors about stocks? I mean, you've been suggesting that this is a hated V-shaped recovery, even as we continue to climb this wall of worry until most recently where we've sort of sputtered in place.
That's right. I mean, it's definitely most hated. I can attest to it from our conversations with clients. We can see it measured in surveys like AAII, where there's stubborn bearishness net still. And then we did the rounds, FundStrat did the rounds with a lot of our institutional clients the last 2 weeks. And I think folks are very cautious, which is actually good for stocks. They're cautious because, of course, markets have moved, and our clients tend to be valuation sensitive. But I think adding to their frustration is that during that April downturn, many were selling their best names because they were trying to get defensive, and then they haven't fully reloaded yet. So I think that's why there's still room for stocks to go up.
So your clients are valuation sensitive, which makes me almost...
Don't forget, there's also $7 trillion. That's $7 trillion sitting on the sidelines in money market accounts from these large institutions, these large funds, these large family offices, whatever. They're just sitting on the sidelines. So this is why Tom Lee calls this the most hated V-shaped rally. And, you know, all these institutions, they missed their opportunity to get back in because they thought we were going to go lower. And then retail investors basically came in and bought up the dip. They missed it. So now they're just sitting on $7 trillion.
Want to laugh because is anybody valuation sensitive to what's been going on in the market? We're historically well above the averages on the prices that you're willing to pay for stocks.
Yes. I mean, what we usually tell our clients, but really at the core, any fundamental investor is going to use valuation as really one of their anchors, is that the stock market had 6 stress tests in the last 5 years, from COVID to the bullwhip supply chain, to the fastest inflation cycle in history, to the fastest Fed hikes in history, then to the Trump tariffs, and then, of course, U.S. bombing nuclear facilities of Iran. Those are things that could cause catastrophes for earnings, but instead the S&P earnings have actually grown. So I think we're in the process of re-rating the S&P. So I actually think multiples will continue drifting higher.
Okay, so let's talk about...
So again, after all of those black swan events, after all of those, you know, really nasty days, the market seems to just get gobbled up by retail investors or by anyone really. And it just shows how resilient this market is. Like there's nothing stopping this.
But other so-called knocks on the market. Valuation, obviously, one of them. They say there's too much speculation. You look at some of these stocks, meme stocks, low-quality stocks, cult stocks, and other things that have gone up. These stocks? What's happening with some of this fervor that feels like it's in the market?
Well, I think the dearth of IPOs over the last 5 or 6 years has shrunk the number of stocks in the U.S. stock market.
Yeah, so they just go on to talk about Circle and just really nothing left in this video. But yeah, I mean, you hear it from Tom Lee himself. He's a perma bull, almost. He's accused of being a perma bull, but I don't know. I like to hear whatever he has to say whenever he does these talks with CNBC or any talks really. All right. So anyways, guys, that'll do it for this portfolio update. I hope you guys enjoyed it. Hope you got some type of value from it. All right. At least maybe understanding a little more about how these weekly pays are and definitely how they can complement a person's portfolio. Outside of that, I got nothing for you guys. I hope you guys enjoy your weekend. Go out, touch some grass. All right. Definitely go have fun. Get off finance land. I will see you guys on Monday. You guys have a great rest of your weekend. Take care.